Hey guys, Sonya from Cherry Creek Mortgage here. So today I just want to talk to you real quick about appraisals. Obviously, it's a really hot topic in this competitive market where buyers are waiving their rights to having an appraisal done on the home that they're buying. Now, of course, if they're getting a mortgage, an appraisal is going to be required even if it's waived on the contract. But I just wanted to make sure everybody was aware that from a lending perspective, the appraisal is meant to obviously serve the purposes of qualifying the loan. So when you have a client, let's say they're putting 20 or 30% down on a house, that value is really we're looking for that to support our equity position. From a financial perspective, you could look at doing as little as 5% down on a home, which really means that from a qualification point of view, when an appraisal comes in, I need to make sure that there's enough equity to keep that person qualified. Now, ideally, we'd like that equity position to stay the same as when they applied. So in essence, if somebody's putting 20% down, that's perfect. They avoid mortgage insurance, that's great. But if that value comes in, say, 3 to 5% lower than what they bought the home for, it's going to push that loan to value above 80% financing, which doesn't mean they will not qualify for the loan, but it does mean now we're going to be in the arena of mortgage insurance since our value and our loan amount are above 80% financing. So when you're waiving an appraisal contingency, if you're putting a good amount of money down, you're definitely going to have some cushion in there. And as a lender, what I do for my clients is we talk about that right up front. What does the value have to come in at a minimum to keep the financing qualified? And what would it look like at a worst case basis of adding on mortgage insurance? Now, if you're putting very little money down and you don't have the means to substantiate the differential between what you're buying a home for and what it appraised for, that's a combination for a real problem. So just be aware of that and be sure that if you are putting little money down for whatever reason, maybe you just want to borrow a lot because rates are so low, that's great. But you have to obviously keep in mind in the competitive market like this, cash is king. And if you're going to make an offer over the list price, or if it's an aggressive list price to start, you want to really make sure you have a good reserve of some funds, if need be, to tap into. So I hope this is helpful. And if there's ever anything my team or I can do for you, we're always here. Take care.